Okay. So chapter 15 and chapter 16 had a lot of overlap in concepts, and 17 really does as well as far as chapter 15 goes. So chapter 15 was all about like cost flows and learning about what costs are. And then last chapter in 16, we learned about job costing. So there we had the same inventory accounts, materials, work in process, finished goods, but we were tracking it by job. So as you know on your homework, yes, that gets a little tedious. Because you're not only tracking totals on all of those inventory accounts, but you're keeping track of each job as it goes through the cost flow. Well, chapter 17 is a little different. Now we're going to look at the process costing. So we talked very, very briefly in chapter 16 that process costing was best used for items that were very like uniform, you know, like if we made pencils or even like computer monitors, things that had the same flow, you know, through our inventory process. So how process costing differs is because everything is uniform, we can calculate costs per unit. You know, we don't have to track per job. So in this chapter, we're going to look at product costs as a per unit. The problem with that is we know we add materials, labor, and overhead into work in process, and the products, even though they're all the same, could be in different work in process stages. So we have to figure out, well, how do we calculate costs when there's still some that haven't been completed in the period? So we're going to talk about that. And that's most of the chapter really, because again, your cost flow stays the same as far as materials, you know, and then you go into work in process where you add labor and overhead. Now though, instead of just having one work in process, we could have more than one work in process. And that's because there's more than one process for completing that, whatever it is, pencil. You know, it may be the first one is cutting the wood, and then the second one is putting the yellow on it or whatever. Third process, putting the eraser on, you know, that sort of thing. So there could be different functions that a whole batch comes in and we start cutting the wood, and then we go to a different work in process where we put on the color, and then whatever's finished goes to the next work in process. So again, our cost flow is the same, just instead of having one work in process, we could have more than one. So it could be like assembly and then, you know, finishing. There's lots of different, depending on the product, you know, we might have 3, 2, 8, you know, we won't deal with 8 in here though. So, but that's a possibility. So that's kind of what we're focusing on. So it just gets a little bit harder. That's when you say first in, first out. We have to use some type of costing method to figure out how to apply costs to each work in process, because we have beginning inventory, we have stuff coming in, we have ending inventory. Well, how do we assign costs to all of those when they're all, you know, in different stages? Okay, basically. So it's a little confusing, but we'll step through it. Again, we kind of talked about process manufacture. You know, they talk about oil refineries, paper producers, chemicals, aluminum smelters, food processors. Those are just a few. I mean, obviously, there's a lot of different items. Pretty much anything you think of that you use as a household item is probably job process. Or not job, I'm just adding them together, process costing. So again, we're going to use process cost system. So we're going to look at it through each process or each department, depending on the product. So we already dealt with job order last chapter. We won't go back through that. So this is just kind of giving you some examples, though, of process versus job order. So again, job order we covered in chapter 16. But process, you're looking at like soft drinks, aluminum, computer chips, phones, chocolate bars, all of those companies, you know, that make those items usually use process costing because their product is unique, or not unique, sorry, it's not unique, it's uniform. Job order companies, you know, like Disney with movies, Nike with shoes, Nicholas Design golf courses, log homes, advertising, all of those that are more built to order, custom, you know, we're making them for a specific client, or we have multiple that we use. Those are going to follow job order costing. Okay, again, you know, I was talking about this, process and job order costing systems are similar. So we still have to record and summarize product costs. We're still dealing with direct materials, direct labor, and factory overhead. We're still allocating factory overhead. So none of that is changing. We're still using perpetual inventory system, which you may not even have realized we were using, right? But remember back from like college accounting even, perpetual inventory system means where we're constantly keeping track every day pretty much, but definitely every month of our cost of goods sold. When we sell a job, we're charging it directly to cost of goods sold, and we're updating our inventories. So that's perpetual. Periodic waits until the end of the period to calculate all of those. Perpetual is actually a little easier. And then we're still providing useful information for decision making. So all of those stay the same. That's kind of a hard one to see, but basically it's showing you a little bit different. When we did job order, again, we had one work in process account, but we could have multiple jobs in there. Now with process cost system, we can have more than one work in process. So in this case, we're making ice cream. So we have direct materials, milk, cream, butter, all that fun stuff. That goes into the mixing department where we add labor and overhead. So that's one work in process. Once it gets mixed, those finished in the mixing all get transferred to packaging, where we add in maybe more labor, more materials, in that case like the tub to put the ice cream in, and more overhead to finish the item. Then they get transferred to finished goods. Okay, so we're just going through multiple work in processes. Every work in process account is the same though. Debit on the left, increase, credit on the right, decrease. They're all inventory accounts. We're just splitting them into processes or possibly departments. Okay. That's a lot of words. We talked about that, so we're good. So physical flow, again, your only difference on your physical flow is that you're going to have, in this case, when we're dealing with ice cream, we have two work in process accounts. But you still have materials account, you still have work in process, you still have finished goods. We're just taking that work in process and dividing it into more than one department. Okay. So obviously, again, this one's kind of big and overwhelming to look at, but it's very similar to chapter 16 as far as how your costs flow. The only difference, again, is now we have work in process mixing, work in process packaging. All your other cost flows are the same. Okay. And then you're going to have factory overhead that's applied to each separate work in process. Okay. Usually based on the labor in that work in process. So how you apply overhead is still the same. You're going to have a predetermined overhead rate. You're going to apply it usually based on direct labor. You'll just have to apply it for different work in processes. Okay. You can kind of get the main gist, right? The difference is we have more than one work in process. So that's the easy part. The cost flow, everything else stays the same. So then basically what we want to do, the end goal is to be able to produce a cost of production report. Okay. So that's basically how many units that we have total in the period and the cost. So our main goal in this chapter is be able to assign costs to beginning inventory, what we started and completed, and then what was in ending inventory. So that way we can move to the next period. Okay, so this is our end goal, and that's actually on the back side of your notes. So, if you didn't get notes, I do have notes up here for those that need some. So again, on the back side of your notes, you'll see a cost of production report, and that shows you where we're going in this chapter, okay? So that's not where we're at yet, clearly, right? You're like, this makes no sense. But that's kind of our whole purpose in the chapter, is be able to do this cost of production report. It looks overwhelming, but it's really not as bad as it looks. Okay. So basically there's 4 steps. First of all, we have to determine units to be assigned costs, which we'll talk about that. Again, when we say units, we mean like beginning, ending inventory, started and completed, or transferred out, that sort of thing. Step 2, we're going to compute what we call equivalent units of production. Okay, we'll talk about that when we get there. Step 3, we're going to determine the cost per equivalent unit. And then step 4, we allocate those costs. So that way, by the end, we have costs for what was completed and transferred to the next process or finished goods. And we have an ending inventory amount as well. Okay. So again, our end goal is be able to assign costs. And the reason we have to do this a little more intricately, I guess you could say, again, with job costing, it was easy to move costs with jobs, right? We knew the exact cost for each job. We had materials, labor, and overhead applied for each job. So as a job moved out of work in process, we took its total costs and transferred it to finished goods, right? Now, again, we have we're transferring completed units, but within work in process, there's going to be incomplete units. How do we assign a cost to incomplete units? Because they're not complete, right? Well, that's what we're going to learn. That's a hypothetical question, so don't worry. Or rhetorical. Yeah, rhetorical. Sorry, I'm getting my questions wrong. Good times, right? So again, you can assign costs using FIFO, LIFO, or average costs. Fun stuff we learned back in college accounting. No, it's not the same, but it does affect how we assign costs. So we're going to use what we call first in, first out, or FIFO method. So most of the time, or all the time in this class, in this chapter, you'll have fun in cost, but when we use FIFO, we're going to put in all materials at the beginning. So it makes it a little easier because we're going to assume that when we add materials, their materials are complete. So that'll make life a little bit easier. So FIFO is usually, the normal flow of units. If you remember first in, first out, that means the first units we started are the first ones we finish and sell. So that's the cost flow assumption we're going to adopt. The most common ones are FIFO and average, weighted average. That's used a lot as well. So again, this is showing you a lot of information, but the end point is we're trying to calculate if we had two different departments, we had the mixing and then the packaging with our ice cream. What we want to do is in that mixing department, we need to figure out what costs of items finished and transferred to packaging and what costs were in ending inventory for mixing. Okay. Well, again, that can be tricky because when they're ending, and if they're in ending inventory in a work in process, they're not complete. So we haven't added all the labor and overhead. Okay. So we have to figure out, well, how complete are they? That's where it gets kind of tricky. Okay. So in this chapter, they're going to talk a lot about conversion costs. Conversion costs are labor plus overhead, if you remember from chapter 15. So again, when we go into mixing, we add all the materials. So all the materials in mixing are 100% complete. So we can count all the materials in the period. But as we go through and mix, we're adding labor and overhead conversion costs. So at the end of the period, we have to calculate how complete they are. Okay. So the first thing we do is determine units to be assigned costs. So a unit is just anything that's completed. Some way to measure. If it's a pencil, then it's one pencil. If we're dealing with ice cream, then we're talking about like a gallon of ice cream, or they're not even a gallon anymore, right? They like screwed us over on size at Browns. I don't even know. They're like 2 pints or I don't even know. I'm not very good with my. Do it.
For packaging reasons.
Right? They charge the same price, but they give us less ice cream. Very sad. But anyway, we'll pretend they're a gallon of ice cream. I think you can still get gallons of ice cream at Walmart. It's just not as good as Brahms, right? So for Frozen Delight, the company we're looking at, our unit is a gallon of ice cream. So really, again, that's just any complete item is a unit. So what we're looking at is just the mixing department. So we're just in work in process mixing. And we're looking at, we're accountable for 65,000 gallons of direct materials. And the way they show that is we had in process 5,000 and we received from materials 60,000. So total units in July are 65,000 gallons. Okay. And that's in the mixing department for materials. So what we have to do is look at, well, what group of units do we need to assign costs to? Well, group 1, we have beginning work in process inventory. Okay, so we need to be able to assign costs to beginning work in process. Group 2, we need to be able to assign costs to what was started and completed during July. Okay. And then group 3, we need to look at ending work in process. So those are the 3 groups we're always looking at in our work in process accounts that we're assigning costs to. And this is showing, we were talking about the mixing, but this is for packaging as well. So both work in processes. Okay. So they told us we had 65,000 gallons of materials total to assign costs to. Well, group 1, we had 5,000 gallons in beginning inventory. Those are already there, those are already added. Group 2, they tell us we had 57,000 that we actually started and completed. And then group 3, in ending inventory, we had 3,000. So that's where we're assigning. We have to break it down. Before we move anywhere, we have to determine beginning inventory, started and completed, and ending inventory. Sometimes they give you just what was started, and you have to kind of calculate it. Okay, so we'll look at that too. But right here, you can see started was the 57 that were started and completed plus the ending inventory. So we started with 5,000, we added in 60,000. Of those 60,000 that we started, 57,000 were completed, 3,000 are in ending inventory. Okay. So that's just showing the numbers. We just talked about that. So group 1, we started with 5,000. A lot of times they'll give you transferred out. What was transferred out is completed, that's 62,000. So we would just subtract 62,000 minus 5 to get what was started and completed. Okay. So we just have to look at how they give it to us. And then group 3, we have 3,000 in ending. So 65,000 gallons total. So whole units are easy to calculate. A whole unit is an entire unit that's been completed and transferred out. So when we're talking about whether it's complete or not, we transferred out 62,000 units. Those were whole units. 62,000 units went from mixing to packaging. Those are whole units. So we just count those at 62,000. We like whole units. The second step, though, is we know we have 3,000 in ending inventory. Again, not all conversion costs have been added to those ending inventories, labor and overhead. So that's when we need to figure out the equivalent units of production. What that means is, given the labor and overhead that was added, well, really materials too, materials, labor, and overhead, given the costs that were added in the period, how many whole units could we have completed? Okay, that's what equivalent units of production means. If we had finished everything that we had added enough labor and overhead for, what would we have finished? Okay, so equivalent units of production are the portion of whole units that would be completed based on how many costs were added in the period. So they're going to tell you, like ending inventory was 3,000 and they were 60% complete, meaning we still need to add 40% more labor and overhead to complete them. Okay, does that make sense? So equivalent units of production is a very important concept to understand. It's really the new stuff. Okay. So it says, assume that a 1,000-gallon batch, or vat of ice cream, at Frozen Delight is only 40% complete in the mixing process as of May 31st. Thus, the batch is only 40% complete as to conversion costs, such as power. In this case, the whole units and the equivalent units of production are as follows. So again, we're going to assume in this chapter materials are always added at the beginning, which means our materials are always 100% complete. Yay. So we only have to deal with conversion costs, labor and overhead. So we had materials, we had 1,000 gallons. So materials equivalent units are 1,000. Materials are always 100% complete. Conversion costs, they told us, were 40% complete. So we take 1,000 gallons times 40%. So the equivalent units, or how much we could have made with all the labor and overhead added in the period, is 400 gallons. So we do equivalent units of production to assign costs. Okay, that's the whole purpose here. Any questions so far? So step one, we assign, we figure out we have beginning inventory, started and completed, and ending inventory. Step two, we compute equivalent units in each one of those. So we usually look at materials versus conversion costs separately. Again, in this class, we will only have it where materials are added 100% at the beginning. So that's why we look at them separately, okay? Plus, we know, labor and overhead are usually added at different points in the process. So a lot of times that is the normal flow. We add all the materials into mixing, and then labor and overhead get applied as we go. So I know this is kind of small, but this is kind of our first we're going to look at here in a second, an example. So it says, to compute equivalent units of materials, it is necessary to know how materials are added during the process. So all materials are added at the beginning of the process. So when we use first in, first out method, what we assume is anything in beginning inventory, we've already assigned a cost to. It's already been assigned last period because it was a last period cost. First in, first out says we're going to, sell the first purchases first. So when we look at materials in this chapter with first in, first out, our materials costs in beginning inventory have always been added already. Okay, so using FIFO, materials costs are always 100% complete. So when I'm talking about materials only, I have inventory and process July 1. We don't need to add any more materials to complete them, right? We added 100% materials at the beginning. Well, these are already in process from last period. So those costs have already been assigned last period, okay? So any beginning materials are 100% complete. So when we're using FIFO method, our beginning inventory, we want to assign costs to finish what's in beginning inventory. Materials are complete. So notice there's 0% applied in the current month. So again, any beginning materials inventory is going to be 100% complete. So it takes 0% to finish it. So our materials equivalent units for inventory and process are 0. Group 2, we started and completed 57,000 units. They told us that. Well, if we started and completed them, they're 100% complete. So we want to assign costs to every one of them. So 100% complete. So equivalent units of materials for started and completed, always 100%, 57,000 units. And that's the same as what's transferred out to packaging department in July. Because we had 0 for inventory, we just add 0 plus 57,000. And then ending inventory, well, again, materials were added at 100%. So those 3,000 materials in ending inventory don't need any more costs added to them. We've already added them 100%. So they're 100% complete. So for materials, our total gallons to be assigned costs are the 57,000 we started and completed, plus the ending inventory of 3,000. So equivalent units for direct materials is a total of 60,000. Again, the materials will always be easy to calculate. They'll always be 0% of beginning and 100% of ending. Okay, any questions on that? Okay. So conversion cost is a little trickier because we have to consider materials or not materials, but labor and overhead that are in beginning inventory, okay? So we know we had 5,000 units in beginning inventory. Those were 100% complete in regards to materials, but we hadn't added all the labor and conversion costs, labor and overhead. Otherwise they'd be completed, right? So we hadn't added all the labor and overhead. So in this case, they tell us that inventory and process is 70% completed in regards to conversion. Well, with beginning inventory with FIFO, we need to calculate how much more we need to add to finish those. 70% has already been added in the previous period. So we need to add 100 minus 70, or 30%, more labor and overhead to finish those out. Okay, so beginning inventory equivalent units are 5,000 times 30%, or 1,500. Group 2 is always easy, started and completed, 57,000, 100%, 57,000. Ending inventory, they tell us our ending inventory, we have those 3,000 units, they're 25% completed, and they'll always give you the completions. So 3,000 times 25%, 750. That's creepy. We would have been able to finish 750 units based on the labor and overhead added in. Okay. So for equivalent units for conversion is 59,250. Okay. Any questions on that? This is really the hard stuff in this chapter, is the equivalent units schedule, because everything else is just kind of multiplying and keeping track of it. You guys are all good. Okay, so let's go in and do the first example, which is actually dealing with equivalent units of production, so we can see how it works. So I'm going to go into the chapter 17 practice. So this very first problem, notice we have 4 because one of them is kind of long, is just dealing with equivalent units of production. So again, down here is our kind of our schedule of equivalent units of production. So we always have 3 groups. We have our beginning inventory, we have what was started and completed, and we have our ending inventory. Those are the 3 groups we need to assign costs to. Okay. So we're just going to fill this in, and we're going to do it in regards to materials and conversion. So the converting department, a Hopkinsville company, had 1,200 units in work in process at the beginning of the period, which were 25% complete. During the period, 16,000 units were completed and transferred to the packing department. There were 2,000 units in process at the end of the period, which were 40% complete. Materials are placed into the process at the beginning of production. Okay, so when I'm looking at this, well, they told me whole units. I'm going to start with whole units. So inventory in process at the beginning told us we had 1,200 units, right? 1,200 whole units. Did they tell us what was started and completed? What was started and completed? No. No. Right, they told me what we transferred out, right? They told us during the period 16,000 units were completed and transferred out. So I'm going to put that 16,000 on the transferred out. That's where they like to trick you, right? And then you were right, we subtract. So I would take 16,000 minus 1,200 to get 14,800. The 14,800 units were actually started and completed. But all total, basically what you can see here, transferred to packing department. Under FIFO, we always assume that what was in beginning process gets finished and completed, okay? So beginning inventory plus started and completed always equal what was transferred out. So anything in beginning inventory starting, under FIFO, we assume gets finished and transferred out. So that's how they're getting those calculations there. And then they give us inventory and ending, which was 2,000. Okay. 2,000. And then total is 18,000. I'm just adding those together. Those are the total units for the whole period. All the units that we're accounting for. So when I'm dealing with direct materials, how much material do I need to add to finish up what's in beginning inventory? Are beginning inventory for direct materials, are they completed or not completed? Yeah, 0%. Remember, under FIFO, these beginning inventory as regards to direct materials are 100% complete. We accounted for those costs last period when we added the materials in. So how many direct materials equivalent units are there? 0. Good. Okay. It said they were 25% complete. These 1,200 were 25% complete. So how much more labor and overhead do I need to add to make them 100% complete? 75%. Good. Remember in beginning inventory, you basically need to add in to get to 100%. Okay, so 100% minus the 25%. So we need to add 75% more labor and overhead, conversion costs. So what's my equivalent units of production for conversion costs? Or units, not costs. How would I calculate that?
Would you do the 14,800 times 75? Is that how you do it?
Oh, well, you have the 75. Just make sure we're doing inventory here, beginning inventory. So 1,200. Yeah, 1,200 times 75%. Okay, so 900. Well, if they were started and completed with materials and conversions, they're how much completed? 0%, 50%, 100%? 100%. Very good. So anything started and completed, the equivalent units are 100%. So I can put 14,800 for both materials and conversion. Okay. Started and completed are always 100%. And so then on the next line, transferred to packing department, I'm just adding those two. Okay. So for materials, it would just be the 14,800. And for conversion, 900 plus 14,800 or 15,700.
So I'm kind of getting confused. On the notes, you have 5 different columns, and this one you have 3, and I don't know which ones are doing.
So the difference on your notes is I added in the percent complete so you could see the process. Here it's just not showing you the percent complete. So for example, on the notes, you'd have a column here that shows 0%, 100%, you know, that sort of thing. Yeah, that's all that's not showing on the board. So now we only need to assign costs to ending inventory and in process. Well, again, direct materials are 100% complete. So how many direct materials equivalent units do we have? And that'll be our conversion. But what about materials? 2,000. Yeah. Remember, materials are added at 100%. So as far as ending inventory for materials, all materials have been added, all costs have been added. So equivalent units of ending inventory for materials is always 100%. But then you're correct on your conversion. They told us we were 40% complete, right? You took 2,000, or was it 40%? Is that right? Yeah. 2,000 times 40%, or 800. Okay. Okay, so materials are always 100% complete in ending inventory. So again, we just add. So our total materials equivalent units are 16,800. 16,800. And conversion is 16,500. 16,500. Any questions on that? All right.
Where did you get the 800 from?
We took the work in process, or sorry, ending inventory, the 2,000, and they told us ending inventory was 40% complete. So 2,000 times 40%. Any questions? That's good. Okay,